Okay, so we are looking at NZDCHF New Zealand dollar versus Swiss franc for our trade today, which ended with a 2R, as you can see here. So we look at the daily time frame and we see that at towards the end of 2025, price was very bearish, making these lower highs and lower lows until actually the beginning of 2026 when it started to break out of this range. As it broke out of this range, what happened was price came down and started to go into this area of liquidity where these liquidity points are situated, and we observe and see that price made a sweep of all these range lows and these ascending lows, which contains liquidity. And from then on, we observed that there was a fractal break which broke that overall bearish order flow after that sweep, which then forms a valid area of demand in the daily time frame here. And so we move on to the 4-hour time frame. We zoom in, we see that price was still internally bearish despite making this shift into the upside from daily demand. And we see that price broke this fractal high after this sweep of liquidity situated over here, which then fueled the market to go up and break above this fractal high here. After it broke above, we were looking now for a retracement into liquidity, and the liquidity that it made going up in that impulse leg was over here. Now it went there. However, at this point, when it liquidated this area of liquidity, our fractal high would be situated here. And price, as you can see, did not break and still continued lower. When tried to go up, this would still be the fractal high at that point, and it started to come closer, sort of retest that, and the next succeeding 4-hour candles, you see that it did not close above this fractal high, and now this would be the signal that that would be the fake out. This would be the fake out, as it did not close above that fractal high. Moving on the way down, it came down again to manipulate, and as you can see, this is another example of our AMD cycle, our AMD cycle. And so this portion over here would be the accumulation, followed by the sweep of liquidity. All these lows were now swept by this candle, which is the manipulation. And at that point, the fractal high would still be over here. As you can see, it tried to go up here, but it did not. Went lower and actually swept that low. And this would be the final manipulation before the distribution, which breaks that fractal high and shifts the internal order flow into bullish. And so we see that it broke market structure here with that market structure shift, creating a new and valid area of demand here in the 4-hour time frame. And so we can see here that we took our entry right over here in this liquidity point, which is also within this new and valid area of demand. And so we see price coming up here, making another AMD cycle, accumulating, and then we see that manipulation here, sweeping that area of liquidity in the 4-hour. This is where we entered, and we see that after it has swept that liquidity, it then began to move aggressively in the 4-hour towards our swing high. And now the swing high would be over here, but we chose to get out of the trade at 2R for a 1:2 risk to reward. But this should print higher in this swing high, as the order flow in the daily shifted to being bullish, and it would now target these descending highs. But that would be the safest trade, which took around 2 days, around 48 hours.